It's Joel Frank here, market analyst for YouTrading, and today we're taking a quick look at some of the trade ideas that I'm looking at across some of the key markets. So let's start by taking a look at the chart here. I've got the DXY, the dollar index, on one-day candlesticks, and as you can see, we've been absolutely surging in the whole year, really, but the pace of the surge has really picked up in the last couple of days. Markets are quite risk off. I'm about to show you stocks and commodities in a minute as recession fears ramp up, particularly focused in Europe, where there's fears about basically Russia never reopening the Nord Stream 1 pipeline, which has just been closed for routine maintenance. But anyway, all of this is feeding into the dollar, and it's currently around about 108. That's the dollar index, which is multi-year highs. So I mean, let me just quickly show you. If you go on a monthly chart, yeah, I mean this data provider doesn't even have the last time that the dollar index was at these levels, but basically it's like 24 years ago or something like that. It's pretty insane. That being said, so this is back on the daily candlesticks. You can see that the relative strength index as of the 12th of July, which is today, Tuesday, the relative strength index is around 75. So that is in overbought territory. So you would expect, or the technicians would expect, at some point there might be a bit of a pullback. Now, obviously, I wouldn't be betting on that pullback to happen this Tuesday, today. We do have some very important US macro events coming up. Obviously, we've got the CPI data, inflation data on Wednesday. Inflation remains elevated in the US, which is the key driver behind why the Fed is raising interest rates so quickly. That data is expected to solidify expectations for a 75 basis point rate hike later this month. But you never know, it might contribute to the growing hope that US price pressures have peaked. And then obviously we have retail sales data later in the week as well. And if that's weak, then that could worsen US recession fears. So I'm thinking that there's the potential for macro developments, you know, downside US data surprises, to lead to a bit of profit taking in the dollar, because like I said, it's overbought. And in terms of the key areas of support that I'm looking at, where I would be looking to potentially get long again, based on, you know, how the macro outlook is down here around, you know, 105.30, 105.40. These highs here from mid-June and the 1st of July. So moving on swiftly, let's have a look at the S&P 500. Now, this is very clearly in a downtrend, and you can actually mark this up quite nicely. There's a trend line, a bearish trend line to the upside, which has been capping the price action since all the way back to the end of March. And also more recently, we've been quite nicely respecting a trend channel to the bottom as well, which is around about here. Now, we've just rejected a test of the top of this trend line. And now we've pulled back towards the 21 DMA, which is this line here, 21-day moving average. But for now, it looks as though we've got a bit of support coming in. But if macro developments this week that we've already described do spark fears of recession and Fed tightening and all these combinations of things that investors don't like, and this 21 day moving average is broken and this support line is broken, well, we could be in for a bit of technical selling. I mean, the first target you would have to say would be the early monthly lows around 3,750. But then, you know, if we're going to stay in this trend line, which is possible if, like I say, macro developments don't go well, then you'd be looking at a retest in the next couple of weeks of annual lows in the below 3,650. Final asset class I want to look at today is oil, because oil is also in a downtrend that can be quite easily marked up and shown. So you can sort of do it like that. There's the top of the trend line, and here is the bottom. Very nice technically, isn't it? Flirting with the $100 per barrel mark at the moment, WTI, and I would suspect that this trend is going to continue. But where there might be some difficulties is when we start hitting this support here from March and April. Okay, we might bounce a little bit when we get down here. There's always the possibility, but then once we hit that trend line, if the global economy is headed into recession, if peak inflation has been and gone, well then I think you're eventually going to break under here. So I would be, you know, from the perspective of a trader, I'd be looking for now for this trend line to be respected. But anyway, guys, that's just what I think, and just some of the asset classes that I'm looking at. Hope you enjoyed the video, and I will see you all in the next one.